What's up YouTube, it's your boy OMG Pips back again with another banger. What is the power of 3? Accumulation, manipulation, distribution. We're going to be looking at exactly how you can use these 3 concepts to catch the momentum from the daily open to the daily close. Don't forget to hit that like button, leave a comment down below, and hit that subscribe button and help us get this channel to 2,000 subscribers. Alright, let's get it. So we're going to be looking at, actually this is a previous trade that I had. If you want to see how I found this setup, click the link in the description. Alright, so let's imagine this is our daily candlestick. The market opens right here, right? And after it opens, it creates this lower wick. When that is done, it goes higher, creates that wick, comes back down and closes right here, right? This is a bullish candle. So the power of 3 is a concept that deals with 3 theories about price, right? And those are accumulation, manipulation, and distribution. So accumulation is what happens when the market opens, or just before the market opens. We experience accumulation. This means we have a consolidation of price. Right after the day opens, we have this move to the downside. And this move to the downside is what we refer to as manipulation, right? And after the manipulation is done, the candlestick starts buying. Once it starts buying, we refer to this as distribution. It starts buying, creates this wick up here, and then comes back down and closes right there. That is a bullish candlestick. And if it was a bearish candlestick, we would say accumulation happened at the open, manipulation was the higher wick, distribution was the move of the day, right? So as a day trader, your goal is either to catch this move right here from the open up to this high, this manipulation, or to catch this distribution from this open going to the downside, right? Those are your only 2 goals: to catch the manipulation or to catch the distribution. And I'm going to show you exactly how to do that, okay? Having explained that, I'll show you a real-time example of how manipulation and distribution happens. Manipulation usually takes place during the London session, and then distribution during the New York session. But sometimes manipulation can be in the London session, and then the distribution also starts right there in the London session and goes all the way through New York session. Or it could start in the London session, or manipulation could start in the London session, go into the New York session, and then the distribution starts from the New York session until the New York close. That's when we see candlesticks that are like spinning tops, dojis, all those candles, right? If you're a trader, then you know about candlesticks type shit. Having explained that manipulation usually takes place during London, we know what comes before London is the Asian session, right? Meaning, during the Asian session, price is consolidating, and after the Asian session, we have the London session where manipulation usually takes place, and then distribution also starts in there. So this concept is utilized on the 15-minute. I'm going to backtest this concept on this chart right here. I'm just going to show you exactly how to execute this idea. So I'll go to a random date. Let me say somewhere even here. Alright, I'll cut it there, right? We have cut price. So since I have cut price, I'll mark where my London session starts and where New York session starts. Alright, so I'll just go to the second day, to the next day. London starts at 2 in the morning. What the fuck is 2 in the morning? 2 in the morning, and then New York starts at 2 in the afternoon. No, it says and then New York starts at like 8, right? Cool. So as I was saying, accumulation, manipulation, distribution. I'm just going to move the chart until it reaches this point here, right? Okay, cool. So as you can see, we are approaching London Open, and as I was saying about accumulation being consolidation, right? This is the Asian session, and it has been in and price has been in a consolidation, right? So price has been in this consolidation. This is what we refer to as accumulation. So after accumulation, we expect manipulation, right? I'm just marking areas where we have liquidity, and I expect price. Of course, we have liquidity below these lows and we have liquidity above those highs, but I want to see exactly where price is likely to mitigate before starting to distribute, right? So from the 15-minute, I go to the 1 hour just to see if I have a PDRA that price would want to mitigate before heading to the right direction. So it goes to the wrong direction first, then it goes to the right direction. Let's give it a second. All right, so on the 1 hour there isn't much information, but we can see price has been bearish. So what is most likely to happen is that we're going to continue seeing bearish sentiment. All right, so since we have established that we are in a bearish market order flow, then we know we have buy side liquidity right here in the form of these equal highs, and we have an order block right here. So if price could do something like this, then I'll know this move would be our manipulation, this leg would be our distribution. But if it continues going to the downside, then I expect to see something like this. If it goes to the downside, I expect to see something like this. Right? So if it does something like this, it means that the manipulation leg will start during London, and the distribution will start somewhere London close or New York Open type shit, then continue to the downside, right? This will be the manipulation and this will be the distribution. So let's see how price progresses. All right, so you can see it has started going higher, and then boom, we mitigated this order block in here. And then now I expect it to move to the downside. Right, so as you can see, once it has started moving to the downside, we have this fair value gap, which is a great entry for us to short on, and would put our stop loss right here above this high, put our entry right there, and put our TP below these lows. So this is a 1% setup, but if you know how to execute ICT, then you would move from 15-minute to the 1 minute. And if you don't know how to do that, I have videos on my channel that show me executing those kinds of setup, and you can check those out. But on this video, I'm showing you accumulation, manipulation, and distribution, right? So if we have our entry like that, let's see how price alright, so we see we took out this sell side liquidity right here with this candle, then price came in and triggered our entry. I just move my TP down to this low right here. Ooh, did you see that? So our TP got hit after this candle, price crashed heavily, and then I don't know how far it's going to go. I'd have to see the 4 hour, but that's not relevant right now. So this concept is very easy to use, it's very easy to understand. You just need to know accumulation, which happens in the Asian session, manipulation, and then the distribution. All right, don't forget to smash that like button, leave a comment down below, and hit that subscribe button to help us get this channel to 2,000 subscribers. All right, it's your boy OMG Pips signing out.
And remember, in forex we're talking about, we came in this game for money. We came in this game to earn a living. So we are not here to play games.